Whenever natural gas started to diverge away from the copper to gold ratio, that always led to massive sell-offs here at natural gas. And so in today's video, we discuss whether this is about to happen once again or whether we're about to see the beginning of a long-term bullish rally here at natural gas, since we have seen that divergence here with cumulative volume delta and natural gas for quite a while now. We've seen bullish aggression actually grow in the last few days, and that ultimately also led to this breakout out of this falling wedge here. We have recently seen this retest of this falling wedge here once again, but as we are currently reversing to the upside again, we could actually see this play out in a sustained bullish rally. But to actually understand whether the underlying drivers of natural gas are also bullish, we have to take a look at some more data, not just those technicals. Let's first have a look at storage. You do see that storage has had a negative net change in this time frame between the 13th of February and the 20th of February. We've seen that net change from 2070 to 2018 billion cubic feet, and so that is obviously a bullish factor. But what we also have to keep in mind is the current war in the Middle East. We are seeing that the Strait of Hormuz has recently been closed. It's a really important choke point for natural gas supply. But at the same time, we have to keep in mind that only around 83% of liquefied natural gas is actually that is actually moved through the Strait of Hormuz is actually shipped to the Asian markets. And so the Henry Hub spot price might not actually be affected in the US. And in fact, we have seen massive price surges happening to the Asian markets concerning natural gas, but not yet here with the Henry Hub spot price on the New York Mercantile Exchange. And so that really seems to be a factor we have to keep in mind. Nevertheless, we are seeing massive supply disruptions. We are currently seeing that Qatar is being bombed. We are seeing that those production facilities are being destroyed. And overall, we do see Qatari LNG production making up or is being equivalent of about 20% of global supply. And that obviously plays a major role on the global LNG market. Now, with all of that said, we do obviously are having the war being a bullish factor concerning natural gas. We are seeing supply disruptions, but we have to keep in mind that the Asian and European markets may be affected more because they are more dependent on the supply that is coming from the Middle East. Now, we are seeing those technicals being bullish. We are seeing those fundamentals, those geopolitics being quite bullish as well. We do have this value area above where we've seen a lot of volume actually occurring, and so we do expect to see this short-term price surge here also happening to the US markets concerning natural gas, since we do have those geopolitical tensions also obviously affecting the US markets. At the same time, we have to take a look at the last few cycles to really understand those drivers even more. And so if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us for our work here on YouTube. Now let's have a look at the divergences that we've talked about in the beginning of the video. What we are seeing here is the copper to gold ratio, which is obviously showing you the cycles of the business cycles. We're seeing those liquidity cycles beautifully being reflected by this ratio. Because obviously, whenever industrial production is high, whenever we do see the economy booming, then the demand for copper seems to outperform the demand for gold. However, when we do see economic uncertainty, economic stress happening, or actually regaining strength in the market, then we tend to see gold strengthening. And when the denominator, in this case gold, is strengthening, we tend to see this ratio falling. And in fact, that is what we've seen in the last few massive crashes here at natural gas. We've seen that actually led to the copper to gold ratio dropping significantly here, in this case the great financial crisis, but also those other cycles have been actually marked by those drops here at the copper to gold ratio. And in fact, we have seen that massive decline here at this ratio for quite a while now. And so you could argue we are seeing this divergence happening again here with natural gas, so that is trending to the upside here since 2024, and the copper to gold ratio diverging away once again. And we can see empirically what that actually signaled in the last few cycles that we've seen happening here to natural gas. Now let's have a look at some other factors. Let's have a look at some other indicators as well. In this case, we are likely to take a look at the gold to silver ratio, quite similar in this case. We do see this ratio between gold and silver obviously surge up in times of economic distress, similarly to the copper to gold ratio. Now in this case, gold is not the denominator, it's in the first position at this point, and so we tend to see this ratio rise significantly when the time of economic distress has started out. And in fact, we have seen that massive decline happening in the last few years, here since 2025, now here happening into 2026. But we've seen that ratio actually reverse recently, and that seems to beautifully show you the change in market sentiment that we are currently seeing here. We are transitioning from a risk on to a risk off environment in our eyes at Chronos. We do believe we're about to see big sell-offs not only at equities but also at metals. And ultimately, when we've seen this geopolitical tension and all of those other bullish factors actually ending to play out and ending to influence natural gas prices, when we've seen a surge happen, we do expect to see natural gas prices to fall as well. And let's have a look at those other indicators to actually understand why we believe that natural gas prices could have a massive downside potential in the long-term view. In the short term, we could see obviously that beautifully play out to the upside, but in the long term, we expect to see a massive price disruption happening to natural gas as well. Because, for example, here with the gold to S&P ratio, we tend to see quite alarming things happening as well right now. Whenever this ratio is rising significantly, we tend to see that gold is obviously outperforming the stock market in the US. And that is beautifully indicating bubbles, that is beautifully indicating that that a crash might be happening next, right? And we've seen that happen here in 27, and all of those other instances, we've seen those big sell-offs here at natural gas. And we are currently seeing history repeat once again. We are seeing this massive movement to the upside here at the gold to S&P ratio. And now if you combine all of those indicators, all of those ratios, you really beautifully see that history seems to signal we are currently seeing this last phase of the business cycle. We are currently at the end of one of those liquidity cycles that might actually being ended by another price surge, also concerning the fact that we do see storage being drained, that we do see those geopolitical tensions, that we do see supply facilities being disrupted and being bombed. And so in the short term, we could see a beautiful inflationary end to this business cycle. But then concerning the next few months and years, we expect to see a structural sell-off here at natural gas due to the empirical indicators and the empirical evidences that we've just assessed. Now, if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video. And also don't miss us on Discord. Just click the link down below to join our Discord server. If you have any questions or comments, don't hesitate to put them down in the comment section. Thanks for your support. See you the next time. Bye bye.